Hey everyone, it's Michael Baltos from Orderflows.com, and welcome to the Orderflows market analysis for Friday, June 9, 2017. Now, stocks were mixed on the day, with the Dow posted a marginal weekly gain of like 0.3%, and the big loser on the week was oil. Oil had a very bad week. It was down about 4%, just under $46. And the markets really had no reaction, at least the equity markets, currency markets had a reaction to the UK election, general election, where the Conservatives, who instead of expanding their majority, lost their majority. So anyway, that said, let's jump into it. This is my disclaimer. Again, I go through the disclaimer because, for everybody that's coming to these videos, I want you to realize trading is risky. This presentation is for educational and informational purposes only. It should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that could be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. They should put something else in there saying, my results may not be your results. Your results may not be the guy next to you, their results. The tools used in this presentation are the Orderflows Trader Volume Footprint Chart, and I talk a bit about the Delta Scalper Indicator. So, let's jump right in here. First, I'll talk about the S&Ps. Let me just find the chart. Okay, so this is the September S&P, and even though we ended the day up a little bit, we did have a very big range. It was about a 30-point range. We had a high of 43.5. I think our low was what, 12.5? Yeah, 12.5 here. But at this high, I don't want to say you don't really have much in the order flow, but it took a while to put in this high. It took about an hour for this bar to form. This bar finished at 924. These are 10 range. This is a 10 range chart. Then took about an hour, put in some very good volume, 118,000 contracts. You can see a lot of volume here, 13,000, 9,000, 9,000 here, 10,000, 10,000, 11,000. And when I see a bar sort of, at a high of the day, sort of spinning around like that, I have a feeling, it could possibly be the high of the day. Now, there was nothing in terms of ratios. There's nothing in terms of divergence. In the bar afterwards, you do have a bearish ratio here. And more importantly, the one thing that was, I remember looking at this thinking, is this going to be the high? And even though there's nothing in terms of ratio divergence, I'm going to watch the point of control. Ideally, I'd like this point of control to be a little bit higher, but it's coming in here at 41 3/4. Next bar, point of control coming in at 41. Next bar, 40.5. So I see we're starting to move off the high, lower highs, lower lows, but more importantly, lower point of controls, and we start moving down. Down, 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 down. You get down here to 33.5. You still got negative delta. It's minus 81. It's kind of neutral in that sense. Then you get this bar here. You got the Delta Scalper kicking off, but again, it's still a red bar. So I'm not looking to take any buys on a candle that can't even turn green and go up. So we still work our way down. We're still looking for determining, are we going to be coming into a low, making a new low, or what? Now, there's nothing really in the order flow telling you to get long. At the same time, we are trending lower, on a pure price action, so to speak, activity, lower highs and lower lows, lower point of controls, it's telling you the trend is going down, down, down. We get down to the low, make new lows. You do have a divergence here, and you don't have a ratio. Okay. So again, I'm not yet convinced that this is going to be our low for the day yet. But we get down here at our low of the day, 24.12.5, and what do you got? You got a divergence, you got a ratio. Again, I talk about these things every day. If you're not using ratios and divergence, I said, if you just buy my software, and only look for this setup, a ratio with a divergence, it's worth it. It's worth it. I talk about a lot of other setups, but again, if there's only one setup you can trade with, it's this one, a ratio with a divergence. And what happens? The market starts rallying. You got higher highs, higher lows, higher point of controls, and next bar you even have a bullish ratio. And the other thing that's very telling is we're coming down here, and you just see these deltas. Yeah, I mean they're negative, minus 900, minus 173, minus 2800. Then you get the spot here with positive 1700, and comes right back with a small delta, 386, and then negative again, negative 1273. And then you get down here, 1265 positive delta here. Boom, 4,831. It's your strongest positive delta pretty much of the day, and it's almost in your absolute, well, since, I mean, it's stronger than this one. But, in an absolute sense, since you hit the high back here at 1023, it's your strongest delta one way or the other, 4831. So, again, this is information that's in the order flow. The delta is the difference between the net buying on the offer versus the net selling on the offer. So I know at this point, buying is solid, legitimate buying is coming into this market. And that's what you want to see if you're going to pull up from a low. Forget that you have the ratio with the divergence. Say you don't have it, and you see a bar like this, very strong positive delta, that's a clue, right? May not be enough by itself, but really the sign is here with the ratio and the divergence, and this is confirming to you in the next bar that, yeah, we are getting the buying coming in from this low. People are accepting this as being the low and being aggressive, saying, shit, I got to get in. We're putting in our low here. I got to start buying it. Price is cheap, and I'm looking for the rally, and we go up. We rally from 16.5 all the way up into the 20s, and then we go higher, higher, higher. Come off a little bit, and we end the day marginally higher, but still, it was a big range day. Even though you look at the net change, just look at the newspaper and see, oh, it was, it was up a little bit. But then, when you break it down and you look at the actual market activity, you see that, wow, you had a big range, and there was some decent trades to be taken there. All right, the next market I'll talk about is the 5 years. Okay, 5 years were very interesting. I like 5 years because, they're a slow-moving market, and when they start trending, if you get yourself on the right side of the trend, it can be very rewarding. So about 8:30, we come into this low. We got a ratio with a divergence. I just showed you a ratio with a divergence on the S&Ps on the 10-range chart. Now you got it again in the 5 years. Now we're just going sideways, though. Point of control is sort of basically lined up. You come down within a tick of the low, and then you start rallying up. I mean, this was a slow one, right? This is 8:32, 10 o'clock. You're still around, around your entry price. It isn't until after 10 o'clock that you really put in a nice rally. But again, there's no reason to be getting short down here. You have reason to be buying right here. And the market just, eventually makes its move. But, this was a slow one that's going to test your patience as, you see the point of controls lining up, which is a sign of a market going sideways. But still no reason to be getting short or necessarily getting out of your position. I mean, the only thing that would make me want to get out of the position is just the time. It's just taking a long time and before it made its move. All right, the next market I'll talk about is crude oil. And again, crude oil was the big loser on the week. It was down about $4, or sorry, 4%. And there's still some interesting things here in the crude. We did have some good movement as well. Here you got 730, you got the swing low, and you're coming down. This was a nice little buying opportunity. If you're just reading the delta, you're coming in on weakening delta. Delta starts positive, gets strong here. Very similar to the S&Ps on the delta side. Starts turning around and you get the big delta push right here. We do pop up. Here you get the delta surge given a sell. Comes off to this new swing low, delta surge given a buy, and you do pop up a bit, come back down a little bit later, make new highs. Here you just have a ratio with a imbalance right on the top of the bar. Doesn't react. Yeah, it comes off a little bit. Again, I find these imbalances at the highs as small move opportunities. Again, I'm not looking for this market to sell off from this high to new lows or anything, but rather over the next couple bars make a little bit of a move lower. We do start making some new highs up here. We get up here just off this high. We hit the high. Next bar is a doji with the delta scalper. And doji candles I just find generally are neutral in terms of order flow, so I'm not really I don't really like to take signals on doji candles when they appear. Get up here, you got a new high, nothing in the order flow up here. You don't have a ratio, you don't have a divergence, but you do start coming off regardless. And a little bit later, oh, that was it for the day. Nothing else there. Sorry, thinking of some other market. But really, the interesting thing was this morning, the 7:30 move here, the way it was coming down like that. This, just again reading the delta, it's kind of lightening up, turning positive, turning nice and strong here, and you get a nice rally there. Okay, so the next market I'll talk about is the Jap yen, and in the morning you had this nice sell-off. You got stacked imbalance, 749 around the 90.50 area. A little bit later, 90.40 area, you get another stacked imbalance. 90.35 area, get another stacked imbalance, and you hit this spot right here. 90.28. You got 950 contracts on the bid there. For Japanese yen or for any currency, that is a big number. You can see the delta it just bulges out, minus 1291. That's quite strong. It's an imbalance. The next bar again, imbalance. Imagine, just try and think in your head. Close your eyes. I'm not showing you a dome, but when it's trading there 90.28, it keeps it. I don't know if it was showing the whole size. Most likely it was iceberged, and traders are there. They're trying to get it lower, trying to break it through 90.28. They finally get it through 90.28, and it just trades off 1, 2, 3 ticks lower. And then what happens? All these people that are selling it, right, are thinking, hey, if we get past this 28 level, the floodgates could open and maybe we'll trade down to 20. But they get past the 28 level finally. Everyone and their brother is selling it, trying to get it lower. But I mean, it's a currency, so sometimes you do get these outsized volume numbers because sometimes maybe someone's working something against a cash position or who knows what. But anyway, the local trader, the smaller traders, they're thinking, hey, there's some support here. I got to get past this, break down the support, maybe trigger some stops here and get the market to go down. And it doesn't. It comes back. It just hangs around here, gets 3 ticks lower. And then you see all these people that were selling it here, the smart ones thinking, shit, I got to cover it. We're not going lower. You got this buying imbalance here, 179. People are starting to scramble. They're covering it. 58 imbalance up here, and you see 110. And so the market, it pops back up, right? So all these people that were selling it in here, hoping the market can go lower, realizing it's not going lower. People are covering it back at a higher price, and the market eventually starts rallying back up. Why? Because there's nothing here that they could trigger. Other time frame traders aren't coming into the market trying to push the market lower. This push, it got pushed lower, yes, by 3 ticks, but there was no follow through selling, from longer time frame traders. And then the market makes its move back up. This is the delta surge here, giving a nice buy signal. Again, you get up. There really wasn't a whole lot. This high I thought was interesting here at just at 2 o'clock. But again, it's 2 o'clock on a Friday afternoon. I'm not interested in trading currencies, even though this is a nice sell signal here. You got a nice ratio right at the swing high. But again, I'm not interested at 2 o'clock on a Friday afternoon in trading a currency. A lot of the cash traders already closed their books for the day. Okay, just really quick, this is September Bunds. Bunds is the German 10-year interest rate contract. And again, I've spent a lot of time talking about ratios with divergence and how it can make you money. So I'll give you an example. Bunds, they open up about 2 a.m. Chicago time. So if you got a job during the day, you could easily trade Bunds, in the morning before you go to work. Here's a nice example, 2:58 a.m. Chicago time. You got a ratio with divergence. You rally up from your low to your high. Got a ratio up here, no divergence. So it's not really a good shorting opportunity. Delta scalper gives you a buy, but it's a buy going into the high. Do you want to take it? I prefer to take buys off the lows rather than off the highs. Here you got a delta scalper giving you a buy off the low. It goes up, next bar goes up, comes back in over the 3rd bar, tests the low where you have the delta scalper kicking off, rallies back up to the high. Here you got a divergence, no ratio. Delta scalper, next bar, comes off, several ticks, so goes from 04 down to 96. Rallies back up, starts coming back down, doing another delta scalper sell here. It's a little bit close to the low, but it's at this point it's a tight range, 165.10 to 164.90. But anyway, a little bit later here, you get a new low and a divergence. This is also the price rejector, but a low with a divergence. What happens? This one fails. Okay, not every time it's going to be a winner. I showed you earlier, you went from your low to your high. That was a nice trade. Here you got one, and it doesn't work. It fails. It comes right back with a bearish ratio in the next bar, which is not a good sign that the trade's going to work out. I mean, just because you get into a trade, don't either let it go to your profit target or your stop level. If you're reading the order flow and you see what's happening in the market is negative, in this case, you get into the trade on a very bullish setup, but then immediately afterwards you got a bearish number, a bearish bar. Be careful. And in this one, it doesn't work. Then you get down here, delta scalper ratio with divergence. And what happens? The market goes sideways. You hit the same level again, ratio with divergence. And now what's happening? Market's starting to rally. You go from your low, 164.74. Realistically, you're probably getting in around 78, 79. And what does it do? It just rallies, keeps rallying. What's the entry? 80, maybe worst case scenario. And what does it do? It comes right up within a few ticks of your high of the day. This time it's already 2 o'clock. But on this move up, is there any reason to be getting short? No. Getting out of this trade? No. I mean, initially here you might be a little bit hesitant because, yeah, maybe you got out. You got delta scalper, you got ratio, you got divergence. It's giving you a buy, but it's coming right back down, with a negative sign. But then again, it's giving you the ratio with divergence here. Get in. It's not giving you any negative sign here in this next bar that, be careful. And you start rallying. You got higher highs, higher lows, point of controls all going up. It's reacting the way you want it to react. So, while you had, basically 3 trades, we'll call it 4. One was basically a scratch here. Maybe you lost a tick. This trade here, you lost, maybe 4 or 5 ticks. This first trade, early in the morning, you went from your low to your high. Wasn't a great move. You're talking 164.90 up to 165.02, the 12-point range. But still, it gave you something. It's giving you, from 94 all the way up to, up to the high. So maybe you could have got, at least 6 ticks out of there. So, this first trade and the second trade, which was a loss, maybe you're break even at this point. This trade, I don't know if you would have gotten out here. Maybe not, but definitely you should get on board for this trade. And this is, so at this point you're sort of at break even, maybe down a tick, maybe up 2 ticks, who knows. But this next trade, this is the one, from 164.80 worst case scenario all the way up to, 165 even, at least at a minimum, hopefully. But at least 20 ticks on that trade. So again, it's trading is about being in the game. You can't win it unless you're in it. All right, you can sit here and Monday morning quarterback it all you want, and it's easy. But again, I know some people that would have taken this trade and then lost on it and think, oh, I'm not going to take the next trade. I want to see it work. And then here it just sort of goes sideways, and it's this one was borderline, it didn't work. And then they miss this trade. You miss it. You shouldn't be trading fully leveraged that you have one loss and it just wipes you out for trading until you can put more money in your account. Trade with enough money in your account that you can take, a loss, 2 losses, 3 losses in a row and keep on going. It's trading in some respects is a numbers game. You gotta put in the amount of trades to get the winners. But if you're not trading for whatever reason, either psychologically or you don't have the money, in your account to sustain 1 or 2 losses, then it's going to be difficult that when the good trade comes around, you're not there to participate in it. So, that's it for the day. So thanks for watching this. To learn more about the trading software I use in this presentation and how you can profit from order flow, visit my website, orderflows.com. And thanks for watching this, and subscribe to my YouTube channel. When I get new videos, I try to post them almost every day. It's not easy sometimes, but I like to try and post videos when I can. At least you said even if you don't buy my software, at least you can learn something about order flow and trading in general. So thanks everyone, and bye bye.